Good morning, traders. Welcome to the live stream. My name is Charles Goff. This is Pirate Traders, where we are focused on the ES/NQ and how the market moves through the two-way auction process. All right, well, what do we have here today? Today is kind of a tricky day for me because I have mixed feelings about the market right now. All of the sort of obvious signs are pointing to bearish momentum, right? They are pointing to the fact that the market wants to go lower. The first of those signs is the fact that yesterday the market made lower highs and lower lows, as well as brought value completely lower than it was the previous day. Both of those are a sign the momentum will continue lower the next day. We also opened with a gap down this morning. That gap is between 67.29 and 67.50. Okay, so it's a roughly 20-point gap. That's right on the line of, do we call it a big gap or not? So more than 20 points, it's less likely to fill that same day. Less than 20 points, it's more likely to fill that same day. We're at exactly 20 points, so it could fill, it might not. Okay, so all of that is bearish. And all of that should have me feeling bearish and should have me looking for shorts to get into right now. But I'm very cautious because the way the market traded the last couple of days has been in a way that we define as the market being pinned. The market being pinned is just simply a term that we've come up with to describe a certain type of market behavior where the market gets range bound in very tight ranges and it trades in a very sort of exact way. Signs that we are pinned, getting multiple bell-shaped curves on top of each other over and over again. That's a sign that we're pinned. Man, this market is immediately moving to the overnight low. So I'm going to explain why in a second, but I don't think the market is going much further than the overnight low. So I'm looking for a look below and fail there. And it looks like it's going to go straight there. But anyway, so, those bell-shaped curves are reason. The fact that a lot of levels are lining up in a very exact way. Look at the way these highs are lining up in a very exact way. Look at the way these lows are lining up in a very exact way. Look at the way these closing prices are lining up with opening prices multiple days in a row, opening and closing at almost the same price multiple days in a row. Okay. And then even last night, when you look at last night's range, which was once again a bell-shaped curve, what do we notice about the high and low of the range? The high is right exactly at a week reference from the previous day. A low came down right exactly to a week reference from a previous day. And this is just the type of behavior that gives you a warning. This might be pinned. It might look like it's momentum. It might look like we're heading in a certain direction. But the further we get away from the pin, which my guess is going to be, somewhere around here, somewhere around 67.70. It's too early to make a call on that. But the further we go away from that pin, the more likely we are to turn around and come back again. Okay. So can we get a trend day to the downside today? Absolutely. Am I willing to short the market for it right now? No, I am not. I'm going to need to see signs from the market that we do have momentum down for me to be willing to short. We are getting the first of those signs right now, which is a gap and go. We opened with a gap down and we have not tried to fill that gap at all. So that is a little bit bearish to see. That's a first sign. The other would be if we get below the overnight low and we get new selling down there and we start to turn the overnight low into resistance, that too would be a sign. Okay. But as of now, as of this moment, what I think is the higher probability is that we are going to fill the gap. And once we fill the gap, we're going to start to spend time and bring in volume inside yesterday's range and then just go sideways the rest of the day. So I do not think we're going to get a gap and go and immediately head lower. I don't even think we're going to fill the gap and then head lower. I think we're going to fill the gap and then just go sideways the rest of the day. So that could play out in one of two ways. Either literally right now, we head up for that gap fill at this very moment, or we look below the overnight low first. So we poke down there, little liquidity trap, right? And then we turn around and come back up for the gap fill. So at this exact moment, I am neutral. And I actually lean much more towards a gap fill than a gap and go. Not sure what happened to the chat this morning. Hello? Chat? Is anybody listening? We got Tom in the house. Mark is here. Exploring. Chester in the house. Guillermo's here. Deborah. Paul says, feeling lonely? Yeah. Yeah, Paul. When I look at the chat and I see like 4 people commenting, I'm like, am I a loser? What's happening right now? Let me know in the survey, where do you think the market is going to go today? Do you think we're going to close between 6,700 and 6,750? Do you think we're going to close above 6,750, so up inside yesterday's range or higher? Or do you think we're going to sell off and close below 6,700 today? Where do you think the market is going to go? Up, down, or sideways? Let me know in the chat. Even if you don't know, it's okay to make a guess. I'm just curious what the general opinion of all 57 of the people hanging out right now is. Do we think we're going up, down, or sideways today? Frito 5000 in the house. Good to see you. Bogdan is here. 230. Silver Media in the house. Jay is here. Jason says, public team, hit the like for the captain. Yeah, nothing wrong with that. If you just show up for the public streams, we're happy to have you. Thank you, Paul, for smashing that like button. Square Trader says openings have just been so slow for weeks with opening chop ranges. That is true. That is another thing that is sort of characteristic of pinned markets, which, like I said, I only think we've been pinned for 2 days here. But the characteristic of pinned markets is that the first hour, honestly, the first 2 hours is often very confusing. And it'll be confusing either in the fact that it'll just keep reversing over and over and over again, or it'll start picking a direction. It'll look like it's going to break that way. And then out of nowhere, it completely reverses and goes the opposite direction. So yeah, that's another sign of pinned market is the first hour to 2 hours tends to be a lot more confusing. Whereas on a normal day, the first hour to 2 hours are sometimes the best opportunities to take a trade. Okay, so now that we have crossed through the opening price, the market is attempting to fill the gap. It is trying to get up to yesterday's low at 67.50. Whether it will or it won't, I have no idea. Okay, I do know that if I'm going to get long here and the market starts to fill the gap, I can go ahead and move my stop above my entry because the gap fill is either going to work or it's not. So if it starts to fill the gap, and then it comes back down, we don't want to be in a long trade anymore. So if you are getting long for a gap and go here, I recommend moving your stop above your entry as soon as you can. Although I am on the side of getting a gap fill. Will in the house, good morning to you. Bogdan says, we took the single prints from 9.3, so we may as well go up a little bit. Yes, so by gapping down this morning, we have backfilled. I don't want to zoom out right now because I got my levels lined up here perfectly. But Yeah, we've backfilled those single prints we left behind from the Trump announcement. So what that means is we have balanced off the market's reaction to Trump. We've absorbed it. It's over now. You know what I mean? He said the war was over. We all relaxed, or I should say we all reacted to that news. Now we're back to exactly the same place we were before he said it. That news has been fully digested. So it's kind of like, hit the reset button. The market can do whatever it wants from here. Jay says, there's so many pirates and so little time to take some house money. Let's take some. Plenty of time. Hours and hours before we go to sleep. Bill in the house. Good morning to you. Will is here. Ahoy. Auntie in the house. Trip Depp says, looking at the SPX, in trading this as though we have already made the low of the day. Oh, he's saying he's looking at SPX and he's trading this as if we've already made the low of the day. Yeah, I think it's too early to make that call. I could very easily see the market poking below that overnight low and then turning around and coming back up. Speaking of SPX, though, we should take a look at the options market here. That is a very red screen on the gamma profile. Let me see if this is updated at all. Nope, still very red. So what does that mean when you have that very, very red, overall gamma? That means that we're going to get bigger ranges. As the market goes down, market makers are going to be selling. As the market goes up, market makers are going to be buying. So it doesn't necessarily mean we're going to get a directional move, which we could, but it just means that they're going to be bigger swings both ways when we do. It is also worth noting we have a very large order down here around 66.50 on the SPX. There's a lot of positive gamma there. So my guess is this is the first leg of a condor and that they're probably going to put on that second leg any minute now above price, because Captain Condor has been back. So I bet that's just part of the condor. But if we don't get that other leg of the condor above price somewhere, this will become a target for sure. So we're not there yet. We got to get below the overnight low. We got to get new selling. We got to be convinced that the sellers are in control. We have to see the ticks hold the zero line. We have a lot of other things. We got to see the hero line turn around and point down. There's a lot we have to, check off first before we assume we're making that move. But that's not impossible, is what I'm saying. And that is, a 70-point move to the downside. So let's give the market a chance to deal with this overnight range and this gap. And then we'll come back to this later on. Percy in the house. Bonjour, Pires. If you are new to the stream and you've never been here before, please jump in the chat and say hello. Also, if you are a regular, you could share the stream. We're public today, so you could, tell your friends. Jump on social media and say, hey, come watch Charles for a couple hours. Okay, so the results are in for the poll. 61%. Wow, 61% of you think we're going to close inside this overnight range, in between 6,700 and 6,750. So you're looking for just a total sideways day. 21% of you think the market is going to go higher, and 18% of you think the market is going to go lower. Those are such evenly split odds. I don't even know what to do with that. That's not helpful. But that's why we get balance, because everybody has a different opinion. Okay, so now we've got 2 checks off the box of bearishness. The first is the fact that we tried to fill the gap a few minutes ago and could not. That's a sign that the market wants to go lower today. The other one is that the ticks are getting smacked down. That's another sign that sellers are stepping in. But one important nuance that we want to keep in mind is even when trying to fill the gap, they could not get the ticks back to the 0 line. So again, that just significantly increases the odds in my mind that we will look below that overnight low, but then come right back up again. So to truly be willing to short this market, I will have to see new selling down here below the overnight low. Otherwise, a look below that fails, that then slingshots its way to a gap fill, could happen. I would say has a higher probability of happening. Okay, so by cleaning up that old week reference, those 2 old week references, we've now taken away the magnets to the downside that were pulling the market down. So we need new sellers. We need momentum down here to keep it going. It also looks like we are pushing into the put wall as well. Let's jump over and look at spot gamma. Yes. Okay. So when we talk about these put walls, this does not mean the market has to reverse right here. Okay. That's not what wall is a bad term for it. The market can easily pass through, but the more the market goes past the put wall, the more force there is trying to pull it back. So it's kind of just like, it's where momentum starts to slow down, essentially. And we are poking right into that right now. So lots of reasons for the market to flip and reverse right here. Let's see if it happens. Okay, it's a look below and fail. We had no resistance there at the halfback. So that is a sign that we are now going to try to fill the gap once again. So it is bearish below the opening price, but the second we cross through it, boop, 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 short covering. What short covering got to do with it? So you're asking yourself, Charles, why does it matter if we cross through the opening price right now? Why is that going to make a difference? Well, because a lot of the people that got short, they got short after the market tried to fill the gap and couldn't, and it crossed through. And that's when they started to sell, was on the way down. So where do those sellers probably have their stops? They probably have them above the opening price, right? That's where those stops are. And so if they took profits at the overnight low, well, they're already out. But if they didn't take profits and then out of nowhere, the market just reversed on them, well, their stops are sitting there waiting. And they are getting less and less patient and less confident in their short. So the sellers are okay as long as we're below that opening price, because we're not going to start triggering their stops yet. But as soon as we cross through it, boop, 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 we start to take out those sellers. Exploring says, why does his tick chart on TradingView show different numbers than mine? Yeah, don't worry about the numbers. Each, data feed reads it slightly differently. Just worry about the change in the numbers, not the exact numbers. So the ticks on the TradingView are currently at like negative 314. And on mine, it's at negative 365 or whatever. That doesn't matter. Don't worry about that. Just this is how you want to watch the ticks. The first thing you want to pay attention to is the zero line. Where is the zero line? So you can plot that out on TradingView for yourself. You can literally just put a trend line there, Okay. So that you know where is that zero line. I missed it a little bit. Okay, so you plot that out so you know where is the zero line. Okay. And then basically what you're watching for is, at this moment right now, are we above or below the zero line? If we're below it, it's slightly more bearish. You have more sellers than buyers in the market. But more important than are you above it or below it is what happens when you get to it. Where does it go from there? And if it goes up, that's a sign you're bringing in more buyers. And if it goes down, it's a sign you're bringing in more sellers. So the main way I'm using the ticks is at a key level where I'm trying to figure out, is resistance going to hold and we continue lower, or is it going to break and we get short covering? That's when I look at those ticks. Right at that moment when we're pushing into that level, what happens to them? Do they stop going up and turn around and start going down? Well, that's a sign of a change of momentum. So you don't want to stare at the ticks all day, every day, or you'll get a million mixed signals. It'll look like momentum up, momentum down, momentum up, momentum down. You'll be all over the place. But just at key levels, at key moments where you're looking for new information, then you look at the ticks. And whatever happens right then and there, that's the new information. So here we go. This is one of those moments we're back at the overnight low. The last time we got here, the market ran out of steam to the downside and turned around and started going back up. Those ticks started going up as we got to the overnight low. Let's see what happens this time. So from, 379, negative 379, do they go up from here or down? And you do got to give it a little bit of time. I don't mean like literally right this second, over the next, let's say 2 minutes. Do they go up or do they go down? If they go up, price will turn around and head back up for the open. If they go down, we'll start to head lower. Okay, so when we first poked down here to the overnight low, the ticks were at negative 390 or whatever. Now they're at negative 611. So what is happening right now at this overnight low? We're bringing in sellers. More people are going short the market here. So that is bearish to see. So I am now officially bearish and looking for a move lower. as long as we remain below the opening price. So this bearishness disappears if we cross through that opening price. But seeing these new sellers at the overnight low tells me there's just no question about it. We have momentum down. We have a gap down, which is now a gap and go. And we have the ticks selling off. That's a sign of momentum. So we are now looking to take this market lower and start retracing the range from the 9th. Okay, so we got below that overnight low. We got the new selling telling us that the momentum is to the downside. Sellers are in charge of the market. And so now we're asking, where is there going to be resistance that's going to hold? Okay, and so we're looking for resistance right at the overnight low, 6706, or this little cumulative node right here, which is also the current halfback. That's another area that looks good for resistance to me, 6714. One of those two areas should hold if we're going to keep heading lower. And of course, when we get there, that's when we look at the ticks, right as we push into those arrows. Malcolm says, good morning. Lots to digest. I think we're going to have a big range by end of day. We have not really done much unless news causes a drop. Well, the negative gamma would agree with you on the large range. I will say, though, there was very little short covering on the first poke through the opening price, and very little liquidation at the overnight low. And when we have larger ranges, we tend to have more extreme reactions at those types of locations. But let's take it one tick at a time. Can they hold the resistance here? Can they get to 66.77? Root says, what tick size do you use on your chart? I'm in 2 tick increments, I believe. Yes, 2 tick. Okay, so here's that moment where we're looking for resistance. So from right now, what do the ticks do? Do they start to go up and push their way through the zero line, or do they get smacked back down once again? If they get smacked back down once again, the resistance is holding, and we're looking for follow-through. If the ticks get above the zero line, then there's no resistance. And we're just wrong. Okay, interesting. So the fact that that resistance didn't hold is less bearish to see. As I said, I remain bearish as long as we're below the opening price. The sort of last hope for the resistance to hold is 67.23. Dun dun. Dun dun. Here's the tug of war, folks. We're right at the zero line. We're right in resistance. If the sellers want to stay in control, they got to smack this price down. The ticks and the price. Sellers holding on by the skin of their teeth. They need that follow through. They need to go make a new low. Okay, I know I sound like the boy that cried wolf here, but these sellers need to smack this price down right now. They're in control, but they're not getting the follow through here, and they need that follow through to convince the next wave of sellers to enter. This resistance just below the opening price will not hold again with another poke. We'll poke through it. So these sellers need to get their follow through right now. I know this seems really boring right now, but this is a big moment. The market is deciding right now, is it going to get a gap fill today and then probably go nowhere all day? Or is it going to make a move to a new location to the downside? So this is a big tug of war happening right now. And as long as those ticks stay stuck right around the zero line, no one has won yet. And the tug must continue. But one side or the other will win. Sheena says, is the 2-minute tick chart not advised? I don't think there's be anything wrong with a 2-minute tick chart. I mean, you can use a 1 minute or a 2 minute. It's just going to change a lot. It's going to be up and down and up and down and up and down. But if you're the type of person that likes that, you like that constant noise, then go for it. But like I said, when we're talking about do the ticks go up or down, we're generally not saying like in 1 second. We're talking about like over a 2-minute period of time. Do they go up or down? So I would say like right now, we've been grinding right in this little node right here for the last 10 minutes. And the zero line, we've been above it, below it, above it, below it, above it, below it. So we're just playing tug of war yet. We haven't picked the direction. But when we get that big burst up or that big burst down, then we know. Or as I said, if price crosses through the opening. All right, no longer bearish. Sorry, guys. Wrong on that call. I'm going to describe myself as neutral for the moment, although I have a feeling in about 2 minutes I'm going to switch to bullish because this now increases the odds we're going to fill the gap. Now, we haven't seen what we want to see, which is short covering. We want to start to see the sellers get squeezed here. If we can see some short covering, pop, 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 followed by some support, some new buying, then I'll be bullish. Right now, I'm just neutral. Too confusing, too choppy. Frito says, Charles, your downside target number 3 held to a tick, by the way. Yeah, and if you want to have some real fun, go look at yesterday's email and then look at the overnight low. Off by 1 point. My downside, my number 3 target yesterday was like right there. Exploring CME says the overnight session was a good downtrend. Yes. But everything changes when the opening bell rings. Yeah, you're in Australia, so you're probably trading this first chunk in here. Yeah, that was a good trend. And then it was a good trend up. And then it was a good trend down. But once the opening bell rings for the U.S. market, everything changes because of this right here, because of arbitrage between stocks and futures. Once the regular stock market opens, every tick they move affects the futures. And so the market does not behave the same way outside of those regular trading hours. Yeah, see, this is very interesting to me. We've now crossed through the opening price twice and got no short covering at all. So this is really artificial. And the tug of war continues. Okay, so this is reading very much like a gap and chop right now, which are infuriating to trade first thing in the morning. So this is the way I see things. To me, it's now a chop zone between the opening price and the overnight low, meaning I'm just not going to try to look for entries here. Is it bearish? Is it bullish? Is it going to break lower? Is it going to break higher? I'm done trying to make that guess inside this range. If we get below the overnight low, and we hold the resistance, we didn't hold it this last time. If we can hold resistance, we'll make a big move lower. Or if we cross through the opening price and get that short covering, we'll make a big move higher. Okay? So I'm going to wait for one of those two instances. And I'm not going to mess with it inside of here. Why do I say that? Because it looks, if you look at the ticks right now, like the momentum is building bearish again. Oh my God, get short, get short, get short, get short. But nuances, right? We left behind a weak high. So even though we have momentum for this 5 minutes to the downside, we left behind another magnet to come back up. Okay. And if you look at the Bookmap chart, there's an iceberg there. So as long as that iceberg is still there, of course, they could disappear it at any moment. But as long as it's still there, that too is a magnet for price to come right back up to the B period high. So to me, what they're doing is they're faking it out. They're making it look like they're about to break lower, and then they're going to come back up again. So I think we're going to chop around here until one side or the other lets go of the rope. Liquidation or short covering. Exploring CME says, Charles, in your workshop, do you teach Bookmap as well? I do. It's going to be a while till I do my next workshop. It's going to be another like 3 or 4 months. So just ask lots of questions, and I'll just keep reminding me to talk about Bookmap, and I'll bring it up during the live streams. So each of the tools that I use, so we've got the market internals, which is this screen right here. We got the Bookmap, which is this screen over here. We got the market profile, which is this screen right here. And then we've got the trace chart, which is right here. Each one of them is a different tool that I use in a different way. So my main focus is the market profile right here. Price action. Where does price go? You know, where does it go? How much time does it spend there? How much volume does it bring in? Like 80% of the information I need in trading comes from this right here. This is the main thing. And then the way I use the Bookmap and the market internals and the spot gamma is that if I'm looking for information that either agrees with me, confluences, I'm looking for areas where things line up with each other, or areas where things contradict each other, right? Areas where things, you know, are giving me mixed signals. And so when everything is lining up, when, you know, the Bookmap looks bearish and the ticks look bearish and the price action looks bearish, I can feel really comfortable getting short, right? Whereas if price action looks bearish, but the ticks don't, or the, you know, order flow doesn't, well then wait a minute, maybe I don't want to enter that short. Or maybe I'm feeling like I understand what the market is doing, but then I look at the order flow and it's not corresponding with what I think. You know what I'm saying? So like earlier this morning, I was looking for a look below and fail of the overnight low to get us back through the opening price, but it didn't. It got us almost to it, and then it reversed and came back down and made a new low again. Okay. So I could see that in the volume dots here on Bookmap. So in certain scenarios, you need to look at different things. So right now, as the market was up here a few minutes ago, around 22, and it was getting resistance, my brain was screaming to me, get short, Charles, get short, get short. Why? Because it should have gotten short covering and gone way up, and it didn't. So my brain is automatically saying, if we didn't get that short covering, we're going to go down. But Bookmap gave me a contradicting signal. Bookmap said, wait a minute, there's a iceberg up here. So don't think it's going to go too far. Even if it's starting to go, it might come back. And the week reference on the market profile chart tells me that if it stops going down at some point and it turns around and starts coming back up, it's going to come all the way back up to there. So that's why I say, okay, chop zone. Right now, I'm seeing momentum down in price action and I'm seeing momentum down in ticks, but price action and Bookmap is giving me contradictory signals. So as a trader, I need to relax and wait for more information. So just keep asking questions, and how I use these things will come up in real world scenarios. But it's important to understand each one is its own context. There's a question here. What's going on with Gamma and the hero line? Let's take a look. Gamma is still massively red, so that implies bigger swings. And the hero line has just now started to roll over. So the question in my mind now is, can hero get below zero? One step at a time. Let's break out of this chop zone. You see that now? So what do we see on both sides of the market now? At the low we just created like 5 seconds ago, we got an iceberg. Up at the high, we got an iceberg. So what do we expect the market to do between these two levels now? Just bounce around until both of those are gone. A sign of chop. Unfortunately, it turned out to be a boring morning to go live to the public. I really hoped things would be interesting. There's a question here from Joe. Can you trade the chop zone from the top to the bottom to the top? It's a great question. And technically, yes, you can. Would I? Absolutely not. Right? The chop zone is the range where I don't know what's going to happen. So what I'm saying is when we get to the chop zone low, I don't know. Are we going to keep going down, or are we going to reverse and come back up? Right? Now, if the market tried to go lower and couldn't and came back up, that'd be a different thing. That'd be a look below and fail of the chop zone. So that's potentially a trade. And then in this case, I would target the week high. So the market started to go lower, came back up, then I could go long, targeting a move to the high. But as long as we're inside the chop zone, I don't want to be entering trades because of this right here. Because they'll reverse at random moments and you don't know when that's going to be. And so you want to wait until you have an edge. To me right now, as I've said, this area is where we're playing tug of war. This area is where the bulls are pulling on the rope up and the bears are pulling on the rope down, and they're pulling and they're pulling and they're pulling and they're pulling and they're pulling. And I'm saying I have no edge while they're playing tug of war. I have no edge while they're pulling. But once they break, eventually one side will give up. You know, the sellers will pull extra hard down here and the buyers will just let go and the market will start to liquidate. Or the other way, the sellers will just let go and the market will start to get short covering. That will be when I can do something. Get the short covering and then it reverses. Well, then I can go short for the move back down. Get the short covering and you bring in new buyers, then I can go long for the move up. But the point is, inside the chop zone, no one's in charge. And it's going to just be very confusing. So this guy that got short at the high for 2,600 contracts and just took profits for 1,900 contracts. So got short here, got long here. That's a day trading bot. And they will rip your face off as long as they keep getting the chop they're looking for. Okay, so round two. Second time today, we're back below the overnight low. And we are once again, for the next time, actually it's the third time. The third time we're asking the question, can they turn that overnight low into resistance? Now, the last time they couldn't. The last time they drifted back up into the overnight range. So now they have to literally hold 67.06. If they hold it, then I'll be bearish once again. If not, I stay neutral. Okay, poor low. That's bearish to see. Come on. There we go. Still no liquidation. This is insane. Bots, 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 bots. So when we talk about pinned markets and reversals at exact levels, where did the B period high reverse? Right at the opening price. Where did the B period low reverse? Right at the A period low. Where is the C period low reversing right now? Right at the B period low. Okay, so now that we're one time framing, can we finally get some liquidation? Okay, so technically, once the market is one time framing lower, we assume it's going to keep going down until we get what we call cessation of the trend. At this point, that would basically be the high of the day. It would be a half a point below the high of the day. So obviously that would be ridiculous. To me, if they're going to hold this momentum to the downside, they got to stay below 67.13. I'm looking at this large cumulative node right here. I'm seeing that this was support in the overnight. So if the US market wants to go lower today, this should hold as resistance, turning support into resistance. Okay. The next target to the downside is the area around 66.77. Exploring says, I saw one coming on June 26th. June 26th? That doesn't sound right. June 1st, actually. Oh, you're saying coming in June of 26. Yes. June 1st. So 3 months away. Frito says, while the ES opened below the single prints left behind from Monday, which is a sign they're repaired, the NQ still has them below around 24,529. Let's take a quick look at the Q. Yeah, those are different single prints, though. Those are from earlier on in the day. Those were just regular single prints that were created by the momentum up in the morning. These are the single prints that I was talking about, which were the, Trump news single prints. But yep, that is a target to the downside if the momentum continues for the NQ. 24,526. Okay, so the question on our minds now is the market has momentum down. How far down is it going to go? Are we just going to make one more little push to the downside and that's it? Are we going to go lower all day long? Are we just going to keep pushing and pushing and pushing to the downside? Well, there's a couple of things we're going to watch from here to give us an idea. One is the tempo, right? We've had this very slow tempo all day, all morning this morning. If nothing changes with the tempo, we should keep melting lower. If things suddenly start to speed up, and that could even be if we start to go down really fast, but if things start to suddenly speed up, that could be a sign that something is changing in the market and we're about to run out of momentum to the downside. The other thing, and it doesn't usually work this perfectly, but today it is, the other thing is looking at the zero line on the ticks. What can we see every single time? So far this morning, the ticks have tried to get above zero. What has happened? They've been smacked down every single time. So that's a sign of that momentum down. Whenever those ticks are able to start staying above the zero, that'll be the sign we've probably made the low of the day. I don't think we're going to go much further. I think 77 to 70 is in play, but I don't think any further than that. Just because of the tempo. The sellers have so much momentum, and yet they're barely going anywhere. That's not a sign of a big, strong trend day. They should be just liquidating buyers right now, just fear and panic. But instead, just a slow meltdown. Every push, somebody buys it up. They're buying every dip. So they dip down, they take out stops, they buy it up. They take out stops, they buy it up. Take out stops, buy it up. Ray J says the ES has had a concave down price relationship to the increases in crude oil. Over the past week, we had ES at 68.52 and crude around 76.75. At ES 6800, crude was at 85. And at ES 6700, crude was at 95. That's not a type of analysis that I look at all in any way, shape, or form, comparing what one market is doing and how that's affecting another market. And the reason is because they don't always move the same. So you may be seeing a reaction right now, today, in this scenario. The war in Iran and the Strait of Hormuz and the, other, countries threatening to cut off their oil and blah, blah, blah. You got this particular chaos in this particular moment. And that might be the way it's playing out. Stocks go up, oil goes down, stocks go down, oil goes up. You might be seeing that relationship, but that might only last for a week or 2 weeks. And then that splits and it stops working like that. So I always caution people. A lot of people try to do this with the ES and the NQ. They try to find a correlation. Like if the ES is going down, the NQ has to, or vice versa. And you can find those correlations and they'll last a week or 2 weeks or whatever, but then they split and they stop working. So I just tend to avoid that type of analysis altogether. Malcolm says, observing on spot gamma, the iron condor now has 2 sets of wings. The second is set 20 points outside of the first set. Hero is unremarkable, but down to only 76 million. Think we can get to 66.70 on SPX sometime in the next 2 hours. Let's see what happens. No, this is not a condor. I don't think. Yeah, I think this is a separate trade. So if this was going to be the iron condor, it would have been one down here and one above price up here. I don't think that's what that is. I think this is a second bet. I think that this is just a level somebody bought a lot of puts, and this is another one where somebody bought a lot of puts. Targeting those levels. We shall see. You're right, though, about the hero line. This is not a hero line that's showing momentum down. Not at all. It should be chugging lower. It should be below zero and moving down. This sort of sideways hero line is a sign of chop, of sideways. Oh my God! The gap and chop continues. So as I told you guys, to me, this is cessation of the trend. Technically, we are still trending lower, but the bears just had everything in their favor. They were one time framing. They were at the lows. And so one little probably piece of news comes in and completely whoosh, wipes it out. So we're back to a gap and chop, y'all. What a day. What a day. What a day. So again, I just want to emphasize we are still technically one time framing lower, but I just personally am neutral. Trump administration is set to suspend the Jones Acts. I don't know what the Jones Act is, but I have a feeling it has something to do with releasing our oil reserves in order to lower the price of oil here in America, or lower the price of gas. Yeah, good call. Malcolm, looking at the net open interest, it does look like a condor. But then my question is, why is that not showing up in gamma? That'd be a good example to send Brent. All right, so now the question in my mind is, what the heck is going to get me in a trade today? Because now we have so much chop, so many mixed signals. It's so confusing. We just got this news. The market instantly reacted and then instantly reacted again. So what the heck am I supposed to do? How am I supposed to enter trades here? And the answer is, I just do nothing. I wait until I have more clarity. As I said, the market is still one time framing lower. So if you wanted to short into resistance, you absolutely can. I just have no confidence of any resistance level that's going to hold. So I don't even know where I'd put my short if I wanted to. Perhaps if in the D period we push back down and then we start to turn the A and B period lows into resistance, that could be shortable. And I would happily go long if we pass through the opening price again for a gap fill. But I don't see any other trades here. Too messy. Malcolm with the quick search results here. The Jones Act, officially known as the Merchant Marine Act of 1920, is a U.S. federal law that requires goods transported by water between U.S. ports to be carried on ships that are built, owned, and crewed by Americans. It aims to support the American maritime industry and ensure national security by maintaining a strong domestic shipping fleet. AO is going to remove restrictions to trade because trade has been destroyed. I see what you're saying. So, yeah. So the Jones Act is what told people that they had to bring goods to America on American ships. I see. I don't know what difference that's going to make, but okay. Basically just screwing over American sailors. Sorry, guys, you're about to lose your jobs to foreign workers that will do it for cheaper. Every employee on every ship is about to be Filipino. Frito says, look at how they load and unload ships to comply with the Jones Act. No, thanks. I'll pass. Sorry. They're not going to win me over with the Jones Act. I just don't care enough. It might, like you say, it might help with trade. It might simplify things. Anytime you remove legislation, you always make things simpler. I just know one of the reasons that they implemented that was because ships, the entire shipping industry of America was fucked because it's so much more expensive to work with American companies because American employees get paid more, that all the shipping in the world was coming from other countries. And so we strategically needed to force American companies to buy their goods from American shipping, ships, but whatever will be, will be. Of all the stuff that's going on in the world right now, that's not top of list for things to worry about. Speaking of things that are not top of list to worry about, me entering a trade right now, not on the top of my list. This is just not my market. No clear edge anywhere here. I want to try shorting the overnight low again, but I'd have to take on way too much risk for the potential reward. It just ain't there. Bogdan says it feels like resistance. It does. It does feel like resistance. The problem is it felt like resistance for a few minutes in the A period too, but then it came right back up. And it felt like resistance for a while in the B period, but then it came right back up. So now it's feeling like resistance in the C period, but it could, you guessed it, turn around and come right back up. So that's what makes it hard to trade. If you're going to enter a short here, where's your stop? Rich says, I've been deep into CLI and Claude working on this algo. Keeps me distracted in this chop. I'm happy to hear about it. There's been a bunch of people. I've had at least 10 different people in the brigade recently talk to me about how they're starting to code their own algos. It's fascinating. Okay. Well, that move in the C period, the market was down here below the overnight low and it was building up momentum to go lower. And then it just boop out of nowhere popped up. That was just the reaction to the news. We've now had enough time to digest that. What did price do? It came right back to where it was beforehand. And now we're building negative momentum again. See, the ticks are starting to hold that zero line again. So that's telling us this market needs to go lower. So I would now say this is bearish once again. The market is one-time framing once again. We're looking for shorts once again. However, the one cautionary thing I would say is, at least in the D period here, you're going to have your stop at cessation up above the C period high. So you're taking on a lot of risk here. Okay. If you're going to trade with a tighter stop, the odds that you'll get stopped out are really hard to predict. But it does look like this market wants another poke to the downside. And once the E period prints, using the D period high as a stop will be much more reliable. I still don't think we're going much further than 66.70. Johnny Ya says, can somebody fill me in on the news? Yeah, it was just that Trump is going to suspend the rules around the Jones Act, which basically just means that U.S. companies can buy goods that are delivered by anyone. They don't have to be delivered by U.S. crews, U.S. ships. Personally, I don't think it really matters, which is why we had a reaction that only lasted 5 seconds, and then it retraced itself. The market was like, oh my God, wait, what? Oh, okay, never mind. This doesn't matter. Rich says, I'm skeptical of a push lower, but I have been wrong many times. You and me both. I'm telling you, it's such a strange thing to try to explain to people that don't understand trading, that not only do you have to be okay with being wrong, sometimes being wrong is your signal to change your mind and do the opposite. And if you can change that mind quick, you can make money. Ray J says the 200 simple and exponential moving averages are right below. We crossed below them intraday on Monday, then closed above. We can take a look. I do like to keep an eye on the 200. Take a look. It's on a chart. Technical analysis. Yeah, boy, mine's coming up very different than yours. Okay, so all right, so talking about tomorrow. Oh, this is in 15 minutes. That's why. That makes sense. That's why. Bingo, Ringo. Okay. Yeah, so the way that I see this, obviously the 20 crossing the 50, that's the first sign of bearishness, right? Then as these two start to expand and separate from each other, that is also very bearish. And the fact that these two, the 20 and the 50, are pointing down while the 200 is still pointing up is just a sign of, and again, we're not talking about longer time frame, but a balance. If the 200 rolls over, boy, that's very bearish. And if the 20 or the 50 cross the 200, that's very bearish. But for now, this is reading as just, balance on a longer time frame. All right, guys. Well, I think this stream is getting very boring. I hate doing a very boring public stream because if somebody discovers me for the first time by clicking on a YouTube video and then like, well, this guy's boring, they're not going to come back. Are there any questions you guys have in the chat? Anything you want to talk about? Speak now or forever hold your peace. Nothing. Ghost town. All right, guys. So as far as I see the rest of the day going, we are one time framing lower. That increases the odds that price is going to keep going lower. We are seeing that momentum in the ticks, right? Sellers are in control. Every time the buyers try to take hold of the reins, the sellers come in and smack them down. The most recent being that short covering from that news announcement. Immediately, the sellers came and smacked it down, right? So the sellers are back in control, and they're going to want the market to go lower. They're going to want follow through because that's what they're working so hard for. As I said, I don't think it's going to go that far. I think this area around 67.70 is a great place for the market to run out of steam to the downside and then just kind of chop around and go sideways from there. If we do get new selling down there, the market can absolutely keep going to the downside. Yeah, like I said, I don't think it will, but it could. If you get new selling below 67.70, you could look for a move down towards 67.55 and then 66.40, but that seems less likely in my mind. And basically what I'm focused on here is you have the trend down on the daily. You had the gap down this morning. You had the gap and go this morning. All of that is really bearish. This market should just be crashing. It should just be dropping really fast, really far, ripping our faces off. But instead, it's just grinding and grinding and grinding. So that's why I think it's not going to go that far today. But for now, it's pointing down. And so we should assume it's going to keep going until we get cessation of the trend. Right now, cessation of the trend is all the way up at 67.24. But once we print the E period, so in 15 minutes, then cessation of the trend will be the D period high. Okay, and so on and so forth the rest of the day. So if you're short, you're targeting an area around 70 to 77. If you're looking to get short, you're looking to get short as close to a previous TPO high as you can, with as little risk as possible. Janya, appreciate it. Bradford says we're at the 200 now. Yeah, I don't pay a lot of attention to how price reacts at those major moving averages. I pay attention to how the moving averages cross each other. It's just a different form of analysis using moving averages. Frito says we could test the Sunday night low at 66.60 if the market wants to. Oh, yeah, we can. Gap down, gap and go. If the market wants to, it could go much lower today. I just don't see any evidence of that right now. ES Trade Monkey, good to see you. I'm well. Your timing is horrible on your arrival. I'm about to say goodbye. And then the last thing we'll look at is we'll just take a look at spot gamma and see how that hero line is building here. Okay. Yeah, that's still pretty sideways, you know. Let's see if they can get below 0 and stay there with the hero line. And that downside target for the search and destroy. Yeah, so both of these levels are targets. So the first one is at SPX 6670, roughly 15 points below us. The next one is at SPX 6650, so roughly 35 points below us. If they can keep one time framing. We got another question here. Heart Medicine says, if Bookmap shows a big buy wall for NQ at 24,500, will it more likely hit or reverse before it gets there? Yeah, I don't like the term buy wall. I just don't like that term. Let's take a look. Give that a couple minutes to load. Yeah, so that is liquidity, is what you're seeing there. That's a large order of liquidity. And the tricky thing about large orders of liquidity is it's impossible to predict what will happen when the market gets to them. Okay? So this is not somebody who put in a bunch of orders at 24,500 because they want to get long there. It's not like somebody wants to get a huge order long here and a huge order short here. That's not why they did that. They're doing that to throw off day trading bots. A lot of the high frequency computers are designed to use current liquidity and changes in liquidity as a way to formulate their trades, right? So if there's just a huge amount of liquidity somewhere in the order books, that's going to factor in how all the other algorithms do what they're doing, right? Because they're using those large orders of liquidity as sort of targets or reasons to not enter a trade or whatever, right? So that's all I think that is. I just think somebody's trying to scare market participants, or by market participants, I mean the bots, with these large orders here. So if you're saying, you know, a market has momentum down, can it get to that level? The answer is yes, it can. So if this thing keeps going down, can it get down to there? Sure. But does that have any effect on whether it will get down there or not? No, it does not. If it changes, then it will have an effect. So if the market is trending lower and it's working its way towards that large node, and then all of a sudden that large node disappears, the market will stop trending lower and turn around and come back up. Or if the market is up here just going sideways and it can't go lower, and all of a sudden that disappears, it might start breaking lower at that point. But in between then and now, it's already priced in. All the bots, all the traders, everyone already knows it's there. And if it is going to affect their decision of whether to go long or short right now, they've already let it affect them. So it's not going to have any effect on price action until the market either gets to it, or before the market getting to it, it randomly changes. Something randomly changes. And there's a million of them on the ES right now. I mean, there's just tons of these large nodes. And they're all over the place. They're appearing and disappearing at all random different times for different reasons. So there's just a lot of bots doing their thing today. There's a question here from Joe. He says, what is the difference between the SPX and the ES? How big is the normal point split? Okay, so the ES is a futures contract. The SPX are options contracts. So that's one difference between the two. Options function differently than futures do. Futures, you're simply making a bet that price will go up or down. And each tick that it goes up or down, you're winning or losing money. When you're trading with options, you're not just making a directional bet, you're making a time bet as well. And so both things are going to influence, whether your trade is profitable or how profitable it is. So that's a difference between the two. As far as the price differences are concerned, that doesn't matter. So I can't really explain why, but every futures contract, so there's a new futures contract every 4 months, right? And every new futures contract has a slightly different price level than other futures contracts because people are buying, those contracts like way ahead. So somebody could be buying contracts right now that expire in like December, right? They're buying contracts like way out, but not as many people as are buying contracts that expire, sooner. So the price moves are a little bit different and the price levels are a little bit different between the different futures contracts. Okay. And you'll figure that out. The more you trade futures, you'll learn when you have that rollover week, it's a little confusing because price levels are different, but you just kind of deal with it and then it's fine. The SPX, on the other hand, that's an entirely different company, right? So the futures is CME, whereas the SPX is CBOE. It's a whole different company that does it, a whole different marketplace. And so they don't want it to be easy to switch back and forth between trading futures and trading options on SPX, because then you're basically letting your competition benefit, right? So they keep the price levels totally different from each other. So like the current price level on the ES is 66.87 and it's 66.81 on the SPX. So right now there's only like a 5-point spread between the two. But when the next futures contract comes out, there might be a 25-point spread between the two. And so because the futures contracts have a slightly different price each time, the difference between the SPX and the ES is going to be slightly different depending on which contract you're looking at. But let me make it much simpler for you because this is how I think about it. When the ES goes up 1 point, the SPX goes up 1 point. When the ES goes down 1 point, the SPX goes down 1 point. So the spread between the two might be different every 4 months, but from a day-to-day basis, they're going to move the same amount. So if I'm looking at, spot gamma and I'm looking at an SPX level and I'm saying, okay, the level that I'm targeting is, 66.70. All I have to do is say, where is the market currently? 66.84. Okay, that's a 14-point difference. So if I'm looking at the ES, I'm going to target 14 points down. If I'm at 90, that means I'm going to, do 76. Okay, is going to be my target. Which, by the way, is right where I'm expecting that support to be. So there's some confluence right there. Right as the market pushes into this area of support, which was based on price action, which is between 66.70 and 66.77. That's the exact same moment we're going to get to that very large gamma level on SPX, which is where often the market will run out of steam and start going sideways. So hence why I say I don't think we got that much further to the downside, but we're still going for now. Chester says, today is a tough day. I joined about 4 months ago, and every day I learn a bit more from Charles. His insights and the tools he makes available to us are fantastic. Thank you, sir. Appreciate you. Yeah, I mean, I'm giving you $800 worth of, software and data feeds. So at least that should be helpful for $20 a month. Andrew says, is there any reliable data about the percentage of bots that are consistently profitable? The usual option is that 90% or so of retail traders lose money, but how about the bots? It's a great question, and it's too complicated to answer. It's not that simple. There is nothing you're ever going to create that just works or doesn't work. Everything is constantly going to have to be adjusted. You know what I'm saying? So you may have a bot that works great for 3 weeks and it's just crushing it. And then all of a sudden for the next 2 weeks, it's not doing as well. And so then the quant has to go back in, figure out what has changed about the market and adjust the bot to those changes. Does that make sense? So if you're a quant, if you're a person that programs bots, you have a job that's very similar to that a discretionary trader has. You have to constantly be monitoring the changes in the market, and you have to constantly be adjusting your trading accordingly. Okay? So from what I understand, and there's no exact way to measure this, I at least right now in 2026, from what I understand, trading with algos is just as hard as discretionary trading. It has about the same win rate. You know, it's pretty much the same thing. It's just a difference. The difference is if you're a discretionary trader, you're working on yourself every day. You're working on making your instincts better, sharper. You're making your knowledge grow, you know, your wisdom and experience constantly grow. And that's your struggle. That's what you're doing every day. You're dealing with the randomness of the market. You're adjusting, you know, your approach. You're adjusting your setups. You're adjusting your everything. When you're a algorithmic trader, you're going to have, let's say, 20 different algorithms. You're going to have algorithms for trending markets. You're going to have algorithms for balancing markets. You're going to have algorithms for markets with large volatility and algorithms for markets with less volatility. And so what you're going to have to be doing is constantly deciding which algorithm am I going to use today. So I don't think one is better than the other. I don't think one has a better win rate. I don't think one is easier than the other. I think that will change in the future with AI, although I've been saying that for years. So I do think algorithmic trading will become easier with AI because it can be doing the monitoring and adjusting for you. But the truth is, last year in 2025, they let all the AIs go nuts, creating frameworks for trading the markets. And they didn't even outperform like the ES. Like they barely outperformed the market. You know, most of them, the best return was Grok, which had like a 4% return on the year, which was like nothing, you know? So even computers trying to trade random markets, it's very, very hard. And so what happens a lot of times with these high frequency firms is that they come in and they find some kind of edge. They find some kind of advantage that they can have. It used to be about getting as close as possible to the CME or the New York Stock Exchange, and by getting their data feeds as fast as possible, that was their edge. But that's pretty much gone now. They're able to send data through satellites now faster than even through wires. So, you know, that edge is basically gone. So these high frequency firms, they come up with an algorithm that is working really well. They find like a weakness in the market, right? Like something that can be exploited. And then they raise a bunch of capital and they trade that for however long it works. So most of these high frequency firms, they're only around for 2 to 3 years at a time. And then they get a ton of money. They get, you know, hundreds of millions of dollars behind them. And they have their algo do its thing all day, every day, over and over and over again until one day, and it might be a year later, it might be 3 years later, it might be 5 years later, they blow up the whole account. Inevitably, that's what happens. And then everybody who put their money behind that account pulls their money, goes to other firms, and the people that work there get fired and go work at other firms. And it seems like it's just this cycle of like, you know, everybody's chasing these crazy returns, but the crazy returns only last for a few years, and then the thing stops working, and then they have to move to somebody else to chase those crazy returns. So what I have found is that, you know, there's this idea that we have as retail traders that somehow Wall Street has it better than us. They have it easier than us. They really don't. You know, there are certainly ways they have it better than us. They have much better data. You know, they have a lot more insider information. They have a lot of advantages over retail. But the one advantage that we have over them is that we don't have to trade. We can sit and watch the market go up or down for days and do nothing, and that's totally fine. It doesn't hurt our performance at all because we're not being measured against the index. You know what I mean? And so that gives us freedom to choose to only trade when we have an edge. And if we choose to only trade when we have an edge, we can actually way outperform even the best, Wall Street firms there are. You know, I mean, the really good firms do 100% returns in a year. You know what I mean? Like tops, if you're talking about the really big names. But we can do that day trading in a heartbeat. 100% return is nothing. I can do that in 2 weeks. But that's because I'm trading with much smaller size. And I don't always have to be in the market. I can choose those entries. As far as the question of, is there reliable data as to whether the bots work or not? I will just say all the big Wall Street firms use bots instead of humans. So the bots do the actual trading, do the actual entering of trades, but it is still humans that are writing the algorithms that are deciding how those trades are going to be taken. But it is definitely unquestionable that a robot is better at executing than a human, because they will take the trade 100% of the time. They will never have fear, and they will be able to execute at lightning speed. So if you found in your own personal trading that's your issue is that you're too scared to pull the trigger, or that your issue is that your style of trading, it has to happen so fast that you literally can't do it, well then, yeah, you should look at algo trading, and you should write an algo and have that do it for you instead. But if the thing you're struggling with in your trading is knowing when to trade and when not to trade, well, then don't even bother with algos yet. Just learn how to read a chart and to see opportunities. Speaking of opportunities, now that we've printed the E period, cessation of the trend, our signal the momentum down is over, is up here at 67.06. So in the C or D period, if we wanted to get short right now, we need to take on a lot of risk. But in the E period, we can get short at the exact same location with way less risk. Food for thought. Johnny says, in your daily trading room, is it like a Zoom meeting or a private website? It is this right here. It's just you need the link to join the stream. So I stream on YouTube, but I use a private link. So you got to have the email from me to be able to join. But what you see right here is what you get. Richard says, if they are profitable, talking about the algorithms, you most likely wouldn't know about them. That is just as true with discretionary trading. I'm telling you, there are literally hundreds of thousands of people out there that make a living trading that you have never heard of and you never will. They just sit behind their computer, they do their thing, and they live their life, and they don't feel a need to boast about it publicly. Ray says, I used to manage money at JP Morgan. It was fun in the late 90s until they introduced model portfolios and started measuring, tracking errors versus benchmarks. No longer got paid to outperform. Yeah, there's been a lot of big changes in the industry. And it never seems to stop. Frida saying, you're telling me there's people making money off of trading and not posting Lambo pics on Instagram? What would even be the point? Yeah, believe it or not, there's all sorts of people that are wealthy that don't flaunt it. But of course, we live in a world where everybody's on social media every day, and social media wants to get our emotions working at the max every minute. And so if they can find you a Lambo picture to get you feeling jealous, oh boy, that social media feed is going to find that. Doesn't mean it's a true representation of the world. Trade Monkey says, are you still teaching the Geppetto? I don't even remember what the Geppetto was anymore. Boy, that's an old reference. That's like a 4-year-old reference. What was the Geppetto? Chester says, how much further can we go today? As I said, 66.70 to 66.77. That's where I think the floor for today will be. And we'll just have to wait and see. As long as we keep one time framing, we'll keep going down. CLZR says those are the people who truly love trading and have made it their craft. I just think it's different personality types. You know what I'm saying? You could take movie stars, right? And like some movie stars, they're constantly in your face. You know, they're constantly at every premiere, every big party, every event. You know, they're constantly at every red carpet. They're, you know, just like every day posting on social media, you know, and then you've got like celebrities who like you never hear from them. You know, the Daniel Day-Lewis's of the world. They just come out with a movie every 5 years or whatever, and that's it. So some people can be successful at things and want to constantly flaunt it, and others can just focus on the work and just want to do great work. And you see it in every area of life. It's not just in trading. It's just trading is the one where it's the most obvious, because when you're very good at trading, you're able to accumulate large amounts of wealth very quickly and easily. And so that becomes the thing you brag about. You know, instead of a red carpet event, it's a red Lambo in your driveway. Oh, the order right before cessation? Yes, that is a trade I still teach. I don't call it the Geppetto. I call it the one-time framing trade. All right. Well, there you go, folks. What a day. So that is cessation of the trend. Again, feels like it's something, you know, news related here. But that's cessation of the trend. So we can no longer trust the momentum down. We now have to assume the market is going sideways. Normally, after cessation of the trend, I'd be willing to short above the value area, above the blue box, and target a move back to the point of control, back to this little line with green letters right here. Normally, that would be a trade I'd be looking to take now, but not today. Just too weird of a day. So this could now become one of those days where we go sideways for a few hours and actually poke up and fill the gap, or poke down and spike lower later on in the day. But this is just a choppy mess of a day. But it is very interesting to me that both times the market was just about to break lower, news comes out, pop, 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 takes out all the stops. We got plunge protection team happening here today. Iran deputy foreign minister, we are not laying mines in the hormones. See, but this is the exact opposite of what they said this morning. They said they're going to keep it closed earlier this morning. Yeah. Iran's supreme leader, closure of the Strait of Hormuz should be continued as a tool to pressure the enemy. So they're saying we're going to continue. And then they turn around and saying, but not with mines. Yeah, and a Saudi oil company is going to start buying drones from Ukraine. Oh my God. We are in such a simulation. So Russia is getting their drones from Iran. So Ukraine had to learn to build drones that could fight those drones. And now Ukraine's drones are going to be needed to fight in the Middle East. It all makes sense, guys. Don't question any of it. Oh, so ridiculous. All right. Well, with that, I will say goodbye. Wish you guys the very best. If you are a member of the Pirate Traders Brigade, we will see you here tomorrow morning. If you are not, just join. It's only $20. You'll love it. Like I said, you get access to $800 a month worth of software and data. You get access to my insights. And sometimes I even tell funny jokes. So you might find it's worth the money just for that. As far as what to expect for the rest of today, we're going to go sideways for a while. I literally cannot guess which, but I do think at the end of the day, we're either going to poke back up and fill the gap, which I tend to kind of feel stronger that we'll fill the gap, or we might spike down at the end of the day. But I think until that time, we're going to go sideways. And of course, any news at any moment could change everything. Thank you very much. We will see you tomorrow morning.